Namaste, welcome back to the deep dive. If you're anything like me, your inbox is probably rammed right now with emails from banks, IRCTC, India Post, all shouting about major changes beginning October 1st, 2025. I'm Sonia Patros, and here with me today is my colleague Anil Agrawal.
Yeah, it's a lot to process. We've been digging through RBI rules, bank policy updates, railway mandates, pension changes, even new gaming laws. It's quite the pile.
It really is. So, today we're doing the heavy lifting for you. This deep dive is about cutting through that noise.
Exactly. We want to help you figure out what you need to do to navigate this smoothly. Avoid any surprises, and maybe even understand the bigger picture behind all these shifts. It feels like a big transformation push.
Think of this as your essential guide to changes affecting your money, your travel, and even your retirement plans. And we are seeing this interesting theme emerge, right? Tighter identity checks happening alongside faster financial stuff.
That's a good perspective. And while October 1st is the big headline date, keep in mind there are some key deadlines and rollout phases happening just before and after that. So paying attention to the details is crucial.
Okay, let's jump into the first big area then. Yeah, finance money stuff. There's some good news here from the RBI, but maybe some less welcome news from a few big banks. Let's start with the positive, the RBI upgrade. They're speeding up check clearing.
Ah, yes, I saw that. They're ditching the old badge system, moving away from that slower model to something called the continuous clearing system. It officially starts rolling out October 4th, 2025.
Continuous clearing. Okay, what does that actually mean for you and me trying to cash a check? Is that like going from snail mail to email?
That's not a bad analogy. Instead of checks clearing in set batches, often taking 2-3 days or more now, settlement should be near real time. Funds could hit your account within hours or by the same business day.
Wow, okay. That's a genuine improvement, makes checks feel more relevant again. Now, wait for spoiler alert. It's rolling out in two phases starting October 4th and finishing early January 2026.
Got it. Okay, phase 1 is starting soon. Now, the less cheerful part. Some major banks are tweaking their fees and rules. This is the check your statement alert section. HDFC Bank, for instance, is making changes to its Premium Imperia program. They're increasing the total relationship value, or TRV, required to stay eligible.
Yes. The TRV, that's the total amount of money you have with the banks, savings, investments, everything, right? It's how they decide if you get the fancy perks. And the minimum qualifying amount is going up. So, keeping that premium status with all the benefits like waived fees or priority service, it's going to require a higher total value. And this applies even if you joined the program ages ago.
Yes, that's a key point. It applies even if you qualified under the old rules before June 30th, 2025. If you don't meet the new higher TRV by October 1st, you may lose those perks.
Ouch. Okay, what about Punjab National Bank, PNB? PNB has a few things, higher locker rents, and they're also bringing in new charges for a couple of things that might catch people out.
Like what?
Charges for failed standing instructions, automated payments, and a charge if you need to change the nomination details on your accounts.
Wait, a fee for a failed standing instruction. So, if an automatic bill payment bounces because you didn't have enough funds that day?
Yes, they charge you a fee.
Since it appears new charges are being introduced, it means you'll need to be extra careful about maintaining sufficient balance for those automated payments.
Okay. And any changes to stop payment charges?
No, the stop payment charges remain the same. Notably, it's specifically failed SIs and nomination changes getting new fees.
Wow, they charge you a fee?
Right. And yes, bank. Any changes there?
Right. Yes, bank is adjusting things mainly for salary accounts. Think changes to cash transaction limits, ATM withdrawal limits, maybe debit card fees, and also penalties for bounce checks.
Okay, so the overall message for banking is pretty clear then.
Absolutely. You really need to look at the updated schedule of charges or policy documents for your specific bank, especially if you have a premium account or use standing instructions. Do so by the end of September. to avoid surprises.
Makes sense. Okay, shifting from money to movement, travel. And here we see that identity verification theme coming back strong with the railways.
Yes, this is the IRCTC other mandate. Starting October 1st, you'll need other authentication to book general railway tickets online.
Right. This feels like a big change, especially for regular online bookers. The idea is to cut down on fake bookings and ticket touts. That seems to be the main driver. Yes, strengthening identity verification. But there's a really important detail here about when this applies.
The mandatory Aadhaar authentication is only required when you're booking general reserve tickets online during the first 15 minutes after the booking window opens.
Ah, okay. So it's specifically for that initial rush, the peak demand period when tickets get snapped up instantly.
Exactly. If you're trying to book right when reservations open for a popular train, that's when you'll need your Darlington verified beforehand in your IRCTC profile.
That clarifies things. So, if you're booking later or maybe for less popular routes, it might not be required.
No. The focus is specifically on that first 15 minutes window for general online booking. It seems targeted at preventing bulk booking during high demand.
And what about booking at the counter? Any changes there?
No, booking at the physical PRS counters, the computerized reservation centers remain unchanged. So that's still an option if online booking with Aadhaar is an issue for someone.
Okay, good alternative. Now, let's pivot from short-term travel to long-term planning pensions. There's quite a bit happening with NPS and related schemes. Looks like a mix of more options and some strict deadlines.
That's right. On the option side, starting October 1st, there's a big one for non-government subscribers to the National Pension System, NPS. They'll now be allowed to allocate up to 100% of their investment into equity.
Wow, 100% equity. That's a major shift from the previous caps, isn't it? Huge for people looking for higher growth potential over the long term.
It really is. It offers much more aggressive investment strategies. And supporting this flexibility is something new called the Multiple Scheme Framework or MSF.
Okay, MSF. What does that allow you to do?
Basically, it gives non government subscribers more control. Under MSF, you won't be locked into just one pension fund manager or one central record keeping agency, a CRA. You can actually run schemes from different CRAs simultaneously, all under your single PRAN or permanent retirement account number.
So you could say have one part of your NPS managed more conservatively by one provider and another part managed more aggressively, maybe using that 100% equity option by another?
Potentially, yes, it allows for much more customized and dynamic management of your retirement pot. The proposed simplifications for exit rules too, like higher lump sum withdrawals and easier partial exits, though those seem to be still in the works.
Interesting. So, more freedom, more flexibility, but you mentioned warnings too.
Yeah. A couple things. First, a small cost increase. The PFRDA, the regulator, has approved a hike in the fees charged by the central record keeping agencies, the CRAs. Okay, so the admin fees for managing the NPS account are going up slightly.
Yes, for NPS, UPS, NPS Lite, and APY accounts. It applies whether you manage your account online or offline. It seems like a modest increase, but it's there, right? But what's the really urgent warning? You mentioned a deadline.
This one is critical but only for central government employees. They have a one time window to choose between staying in NPS or switching to the older unified pension scheme, UPS, or vice versa if they previously opted out of NPS. That choice must be made and the process completed by September 30, 2025.
And after September 30th, no more switches allowed. It's an irrevocable deadline. So for those employees, this is a really major decision point for their retirement future, and the clock is ticking.
Okay, September 30th. That's a hard stop. Understood. Let's move on to our last section, logistics and a big legal change. Starting with Speed Post, right? India Post is updating its Speed Post service. And like many updates we're seeing, it involves a price change and a new security feature.
Okay, price change first. Just a general hike.
Yes, price revision across the board for Speed Post. GST will be applied separately, and the exact charges will vary depending on the category, weight, distance, that sort of thing. So expect it to cost a bit more.
And the security feature, how does that tie into the identity theme?
It ties in directly. They're introducing a new OTP based delivery system.
OTP, like a one-time password for receiving a parcel.
Exactly. When your speed post parcel is out for delivery, the recipient will need to provide an OTP, likely sent to their registered mobile number to the delivery person to receive the item.
Huh. So, like when you get an OTP for a bank transaction, but for mail.
Pretty much the idea is to improve security, reduce delivery fraud, or items being left with the wrong person, and arguably add a layer of convenience through confirmation. It echoes that Aadhaar linkage for tickets using tech for verification.
Interesting. More secure. Maybe slightly more hassle if you miss the OTP message. But I can see the logic. Okay, finally, let's talk about the elephant in the room for online entertainment. The new Online Gaming Act. This sounds like a really big deal.
It absolutely is. The Promotion and Regulation of Online Gaming Act 2025 is a major piece of legislation that fundamentally changes the landscape.
What's the core change?
It draws a very sharp line. The act outright bans all online real money games.
All of them. What qualifies as a real money game under of the Act?
It seems to target games where you pay money to play, and the outcome involves an element of chance leading to a potential monetary win. Notably, companies like Dream 11 or Pokerbazi fall under this ban. However, the act also explicitly aims to promote esports.
Oh, okay. So, it's distinguishing between games seen as predominantly gambling or chance-based, which are banned, and competitive skill-based esports, which are encouraged.
That's the intended distinction. Yes, trying to curb online gambling and its associated issues like addiction and money laundering while fostering the legitimate esports industry.
And the consequences for breaking the ban, I hear they're severe.
Extremely severe. For individuals caught playing these banned games, the penalty can be up to 3 years in prison and a fine of up to 1 crore.
Wow. And for the companies running these platforms, for promoters or companies, it's potentially 2 years in prison and a 50 lakh penalty. These aren't trivial fines. They're a serious deterrence. Is there anything else in the Act targeting these platforms?
Yes, a crucial financial element. Banks will actually be prohibited from processing any transactions related to these banned online real money gaming platforms. It cuts off their ability to take payments or pay out winnings.
Precisely. It aims to dismantle the financial infrastructure supporting them, making it impossible for them to operate in India after the Act takes effect. It's a crucial regulatory shift with huge implications.
We've covered a lot of ground banking, travel, pensions, post, gaming. Let's try and boil all of this down. What are the absolute must do actions for listeners right now?
Okay, based on everything we've discussed today, here are the 4 key takeaways for your immediate action.
Lay them on us.
Number 1. Check your bank's policies, especially if you bank with HDFC, PNB, Yes Bank, etc. Look for those new TRV requirements. The fee for things like failed standing instructions. Know what's changing before October 1st.
Number 2, link your Aadhaar to IRCTC if you haven't already, particularly if you book general train tickets online, immediately the booking opens. Get that verification done now to avoid issues during that crucial first 15-minute window.
Number 3. Finalize your pension choice, but only if you're a central government employee eligible to switch between NPS and UP. Yes, the September 30th deadline is firm.
Number 4, adjust for logistics changes. Factor in that speed post is likely getting more expensive and be prepared for the new OTP system when receiving speed post parcels. Make sure your mobile number is up to date with couriers.
Excellent summary. Check banks. Link other for rail booking rush hour. Finalize pension choice by September 30th if applicable.
Thanks to our viewers. If you liked this podcast, please like, comment, share, and subscribe.
Alvida Sublog.